Hi, in the last class we have discussed about pro forma of indirect method of cash flow statement. Now we're going to do one problem based on that pro forma. So illustration 2, we have already completed illustration 1. We're going to do illustration 2. These are the opening liabilities 2001 and then 2002. Opening liabilities, closing liabilities. Opening assets, closing assets. Now this is the share capital. Share capital didn't change, right? Opening share capital is same and as well as closing share capital is same. So we don't need to worry about that then. And then debentures has been changed. So we need to find out what made changes in the debentures. Unpaid interest. So that means we have to pay interest on the debentures, and out of that we didn't pay 5,000 rupees interest. Profit and loss account, there is a change. So we need to find out the what made changes. Goodwill is an intangible asset, and it is an intangible asset, and then the value of the goodwill has been decreased from 1,15,000 to 90,000. That means if normal building or land, if the value of those assets depreciates, we will call it as depreciation, right? The value of those assets if decreases, then we will call it as depreciation. Increases, appreciation. But whereas in intangible assets, if the value of the asset decreases, value of the intangible asset decreases, we will call it as amortization, right? So now we will just call it as amortization. There is a difference. And discount on issue of debentures. The discount on issue of debentures, there is a change here also, right? So we need to find out what made the changes. Okay, so whenever there is a change in opening and closing, to get the better picture, we need to prepare the ledger, right? Okay, you are required to show the related items in the cash flow statement if discount on issued of debentures amounting to 10,000 has been written off during the year. Now, so we need to prepare ledger for this because there is a change in the opening and closing, and we need to prepare ledger for this. There is a change in opening and closing. And whereas goodwill we know that is amortization, so we don't need to prepare for that. Okay, so in the last class we have discussed we have to start the question with the net profit before income tax. In the question they didn't give anything about income tax, so that's why you don't need to worry on that tax part, but we need net profit. First we need to start the question with net profit. So we'll see the P&L account. In the P&L account they gave the closing and then they gave the opening. So based on this we can find out the net profit during the year, right? So the closing P&L account is 90,000. Opening P&L account is 50,000. So remaining 40,000 is the profit during the year. This is the profit during the year we got. So we'll start with the question with answer with the 40,000 rupees, right? And then we need to add non-cash or non-operating expenses. We have discussed in the last class. Non-cash or non-operating expenses. So first thing is amortization, right? There is a 25,000 in P&L account. We might have wrote amortization 25,000, but because of this transaction there is no actual cash outflow, right? But we have deducted it in P&L account previously. Now we need to add back. That's why we have added back 25,000. Now discount on issue of debentures. So there is a opening and closing, and then we need to prepare a ledger for that to get the better picture, right? So prepare a ledger. So we will prepare a ledger, discount on issue of debentures. And this is the discount on issue of debentures account. Is the discount on issue of debentures is what? Expenses. Expenses shows which balance? Debit balance. So opening balance should be in the debit side. So this is the opening balance which is already given in the question, and this is the closing balance, this is also given in the question. And whereas in the adjustments they have mentioned, yeah, you are required to show the related items of if the discount on issue of debentures amounting to 10,000 has been written off during the year. 10,000 has been written off during the year. So what is the general entry when you written off that like that? So this is the general entry. Profit on loss account debit to discount on issue of debentures account. So profit and loss account debit to discount on issue of debentures account. In discount of issue of debentures account, it would be, it is by P&L account. By P&L account 10,000. Based on this general entry we are writing this, right? Okay. So and then whatever the remaining is, remaining balancing figure, we are transferring to the debentures account, right? So the debentures account, when you transfer, the general entry look like this. Discount on issue of debentures account debit to 15% debentures account, right? Okay. So because generally people will make mistake seeing this 5 lakh and 7 lakh 50,000. That means opening balance is 5 lakh and the closing balance is 7 lakh 50,000. Generally people make mistake by thinking that they have issued 2 lakh 50,000 extra debentures, right? But since they have the discount on issue of debentures account also, that means they have issued the debentures at a discount of 35,000, which we got here, right? Okay, so let's prepare the debentures account also to get the clear picture. So debentures is a liability, so the opening balance should be credit side because liability shows credit balance. And then based on this general entry, discount on issue of debentures account debit to 15% debentures account. In 15% debentures account, buy discount on issue of debentures, that is 35,000. And then this is the closing balance, and the balancing figure is 2,15,000. So we can consider this as fresh debentures issued during the year. So what would be the general entry? What would have been the general entry? Bank account debit to 15% debentures account. So in 15% debentures account it is by bank 2,15,000, right? Okay. So now we'll put all this ledger in the cash flow statement. Now discount on issue of debentures account in P&L account again. In P&L account again you might have written here. Let me write here. In P&L account, when you write off the debentures, which is 10,000, you would have wrote discount on debentures 10,000 in P&L account, right? When you write off, obviously you will write in the P&L account, but we want only the operation item relating to operating, but this is non-operating activity. Previously you have deducted, now add it back 10,000, right? Okay. And then interest paid on debentures, we have paid interest also, right? So sorry, so how much total was 5 lakh into 15%, which is they already given 15% is here. So that means total interest is 75,000. We haven't paid 5,000, but in P&L account it doesn't matter how much interest you incurred, you will write the total 55,000 you have incurred the interest. Paid, unpaid also you will write the, you will debit, you would have debited the, you would have minused the 75,000. So that's why we will add back that 75,000 here. So then you will get, if you do all those things, you will get the net cash from operating activities, right? Then cash flows from financing activities. So we have received this 2,15,000 by issuing the debentures, which is financing activities, and paying the interest also as a financing activity. We have paid only 70,000, by we have to minus that remaining 5,000. So in the cash flow statement we need to record only actual cash outflow, right? So whatever the cash, if the cash gone out, then only you need to record, otherwise you don't need to record. Then this is the net cash flow from financing activities. Okay, now you will see the third problem, which is very easy based on the direct method, right? Okay, so these are the third problem. Cash sales, trade receivables, trade commission, sale of investment, cash purchases, trade payables, by office and selling expenses, income tax, investment, and rupee fee. So these are the summary of the cash book. They have given the summary of the cash book for the year ended. So what are the cashes we have received, right? So these are all here. In the debit side we have all are received, and then credit side all are paid. Okay, so in the operating activities they asked us to find only operating activities, so we will consider the things related only to operating activities. First, sales. Cash received from sales 1,50,000, right? And then trade receivables is 1,75,000. We have received money from them, from trade receivables. We sold goods on credit basis, right? And then they has paid back. When they paid back, then only we will record in cash book, right? So it would be debtors account debit to cash account. Previously debtor, when they paid back, we will write debtors account debit to cash account. In cash account by debtors. Sorry. Cash account debit to debtors account. So in cash book it is to debtors. Just a minute. Cash account debit to debtors. But when you have sold the goods, you would have wrote debtors account debit to sales account. When you have sold the goods on credit basis, you would have wrote this general entry. When you have received the money, you would have wrote this general entry, right? So this is the summary of the cash book. So you have written the 1,75,000. We have received the money from them. So this is also operating activity. So add it. Trade commission. We have received the commission. All debit side are received only. So trade commission. Add it. Sale of investment. This is investing activity. So we don't consider. Loan from the bank. Financing activity. So don't consider. Interest and dividend. Also the investing activity. So we don't consider. Interest and dividend, if you receive, that is a investing activity. If you pay, that is a financing activity, because you will receive interest and dividend only when you have invested in somewhere else, right? So that's why it is investing activity. When you pay interest and dividend only when you have taken a loan from some other person, or when you have issued the shares to some other person. All right. Okay, so cash purchases. So cash purchases is 1,20,000. So deduct that. Trade payables, again we have bought the goods on credit basis. Now we have paid the money 1,57,000. Office and selling expenses 75,000. Income tax paid 30,000. So remaining is net cash flow from operating activities. So this is a direct method which is easy. In the next class we will continue with the fourth question.